Hey, welcome back. Today is all about AI trading and getting you on the right path to automate more of your finances and potentially move some of those manual trades that you're making into more of an automated fashion using AI and machine learning to make better predictions. So without further ado, let's get into it. So today we're going to be talking about Composer, which is an AI piece of software that uses backdating, machine learning, and an algorithm to help make trades either based on timing, market conditions, if a stock or an ETF or even a bond falls above or below a price, and then execute on that. So if you look at my screen here, the first thing you're going to see is what are called symphonies. And symphonies are a way to help automate your trading by looking at things that have already been created, symphonies. So in this case, I'm going to actually look here in this first one, Global Equity Momentum. And Global Equity Momentum, if you look here, is nothing more than, I'm going to go down here to the symphony, is nothing more than buying SPY calls and VEU, which is the Vanguard FTSE All World US Index Fund. And basically what this does is we're going to start this symphony off. If the weight is equal among the underlying equities and the asset classes, if 252 days, the return of SPY is greater than the cumulative return of VEU, do nothing. If it's not, then what they're going to do is go in here and we're going to sell or buy a different fund. And really, the reason I'm looking to do this is, I keep money in Betterment. I've got money in Vanguard. I've got money in Wealthfront. I've got, as you've seen, I'm going to link a video here. I've done venture capital with Titan. I've got real estate with Fundrise, with here, and through a couple of private syndicates. But this is something new. This is something more cutting edge. And this is a way for you and to anyone watching to help automate some of that trading. And if you're looking to say, hey, look, I want to get out of individual stocks and move more into the automation space, you can do that. So if I look down here, I can see all these different symphonies that are created. I mean, this one's the Buffett. And really what this one does is, it'll tell you here a strategy laid out by Buffett to deploy 90% of the fund in S&P 500. Those are ETFs, and 10% in short-term, U.S. government bonds. So the one thing I want you to remember with Symphony and a lot of these AI Composer tools is they're not doing things like tax loss harvesting. They're not doing things like dividend reinvestment. Of course, if you are getting a dividend, you can continue to hold that dividend, but they're not doing some of more of the tax efficient things to keep your portfolio balanced. So this is more, you want more control and you want to be able to really tailor your portfolio for your needs and where you think the market's headed. As I record this, the Silicon Valley Bank declared default on Friday of a lot of its funds, and a lot of people are looking at different ways to move money around, and this could really be one that could help. If I go over here into Discover, these are some of the symphonies that come with the platform. So you have your featured funds, and again, I'm going to go through mine here shortly. But you have the featured fund here. Some of these, buy the dips. These are somewhat self-explanatory. Stocks, bonds. If you really want to play oil, you can. I don't know that I would be doing that, but that's something you can play. And then at the onset here, you can see real quick, what the annualized return is, the Sharpe ratio. They do have beta ratio in here as well. Here's some community stuff. If you want to do SPY calls and with a minimum drawdown, with not a lot of drift, you can do that. Consumer picks. I like these grow your portfolios and these classic ones here, like the 60-40. The 60-40 here is great if you want, you're used to 60% stocks, 40% bonds. And down here, you can see what they're buying. They're just buying VTI and BND 60-40. And it's going out there and doing that and making sure that, there's not over rotation on too much of the bond or too much of the ETF there. So if I get out of this, I'm actually going to head over to my portfolio. I put some money in 2 weeks ago. I put $1,000 in just to see what it would do. I've got the Hedgies Excellent Adventure Refined Symphony here. And this is a little bit more complicated. So I'm going to walk you through it step by step and make sure we're on the same page. So in this case, we've got a little bit of cash. We've got the Treasury, some Treasury shares in TMF. And then we've got the Ultra Pro S&P 500 ETF. And really what it's doing is it's breaking it down 49, should be 50-50. But what this is doing is it's basically saying we're going to specify a weight 100%, if 10 days max drawdown of the SPY is less than 5%, we're gonna turn risk on. And risk on means that we're gonna go ahead and adjust for that and make sure that the Ultra Pro shares go to 55% and the Direction Daily Treasury Bonds, or the ETF for that, goes down to 45%. If not, risk is off. And then we're gonna break those down over 4 different equity classes, or equities. So we've got the bonds here, we've got gold, we've got bonds here again, and then we've got another iShares. So really, if you look over here, this breaks down the symphony. So every day, you determine your allocations. If the drift is more than 5% from its target, we're gonna trade to match that allocation. And then over the 10-day maximum period, if the SPY falls below 5%, risk is on. For risk on and risk off, you've seen what it does here. What I like about this is it's very simple and very easy to read. You can see what's going on here. And then you can actually go into backdating and see what it's done over all time. And this is for mine here. So if you look in this case, we've seen a cumulative return here, or an annualized return, sorry, of negative 34%. The max drawdown, 2.8%. Sharp ratio looks good. Let me go back here. So in this case, for me, I put in $1,000. I'm cumulatively up about 0.34%. And as you can see, what it does is it looks at my portfolio, and then it looks at the strategy or the symphony that I'm currently invested in. So let me go back here, and we're gonna actually create a new symphony. It's really easy to do. So in this case, I'm gonna just label it demo. I'm gonna add a block. Let's just call it an asset. Let's say I wanna invest in LLY. Let's say Lily. I'm also going to invest in one of my other favorites, Coke, which is a great dividend compounder. So let's go with Coca-Cola. There we go. And we're just gonna say those are weighted evenly. So we're gonna say, we're gonna go weight equal. And then I'm gonna add another block here, and we're gonna say, if the condition for this block is, let's see, actually, you know what, we'll do another weight allocation, and we'll say if it's equal, then we will, actually, you know what, let's go back. We're gonna add another security. We'll do an asset. I like SPY. So let's go ahead and do SPY 500 ETF there. So really what this is saying is we're going to give it an equal weight between Lily and Coke. If that weight falls, if it's not 50-50, what I wanted to do is then start buying SPY calls, or SPY ETF. So to help balance it out. Now again, I just picked those 2 stocks. You could pick anything you want. You can make it as complicated as you want. The one thing I like is you can actually go in here and you can do backdating. You can do slippage and adjust, your allocation. So say you invest 100,000, it'll go through and it'll tell you what it looks like, which I really like. And then from there, you can do an investment for it. You can share it out, or you can, follow your own. One thing I really do like is the ability to go in, discover some of these, and then say, hey, look, I'm interested in this, an inflation hedge, right? I can take this and then go in here and edit it, where I've already got this symphony set up, and then I'm able to make adjustments. So in this case, maybe I don't want to have 30% that go to Vanguard ETF, or I want to say 50% that goes to gold. I can come in here and edit this and say, instead of 30, I'm going to say 50. Now my allocations changed. I need to adjust these, but let's just say I go down to 50 and I say this is 10, and that should give me enough. So 40, 40, 60, yeah, I'm at 100%. Now I should be able to run this, and it's going to come back and tell me, okay, what does this look like? So in this case, if I were just to buy SPY and leave it alone over the last, let's look, say 3 years, I would actually be better off buying SPY. I've got about 10% almost. I would be better buying SPY than I would be working in this fund. So, again, not always something that you should be over rotating too much in your portfolio on, but it's a great way to back test. It's a great way to see key figures like alpha, beta from a risk, R squared, and R sharp ratios, standard deviation, max drawdown. So In this case, my max drawdown at 10.5% never went above or below 10% of the total amount in the fund. Where in this case, you've got a 24% above or below dip. So that drawdown may be too much for some. Your Sharpe ratio looks good in both. And then you could go down here and see the allocation of what was in those funds going all the way back to the inception, 47 trades made in 2023, 2022, 2021. So you can see how this thing's performed. You're able to back test and obviously see a description here. And then if you want to, follow it, you can, or you want to share it out, you can do that as well. So I'm going to go back here to the beginning. I'm going to say discard. I want to wrap it up by saying a few things. One, why are we looking at this? We're looking at different ways to diversify our funds, maybe make some different moves that we can't from a robo-advisor. So the robo is going to be more automated. You're going to have less control. You're not going to be able to buy individual stocks. So that may hinder some people. Number two, we're getting more diversification in our total portfolio. So not just stocks, not just real estate or ETFs, but we're able to, maybe if I want to buy calls or I want to buy puts, or I only want to invest in bonds, or I only want to invest in gold. This is a way to do that. And number three, we're getting the ability to backdate. So we're able to say, hey, if I just compare this to the SPY or QQQ or any other kind of index fund or ETF that mimics a market like the S&P 500, what does that look like? And maybe I'm better off just buying the SPY or the S&P 500 index and leaving it alone and collecting my dividends and going to the beach. But this is just another tool to put in the arsenal and make sure that we're doing everything we can to, again, make sure we're diversified as possible. We're pulling in those dividends. We're drawing down on the risk, and we're making sure that we're protected. But then we're also learning. We're learning something new. We're using AI and automation, which I'm a huge fan of, to automate more of our investments. And then if we have the ability, we see a portfolio here, we see a symphony that we really like, we're able to invest in it, and we're able to potentially, take some capital off the books and get some gains, back in the portfolio. So with that being said, I want to thank everyone for watching. I want to make sure you design your financial freedom. Take care. Bye-bye.